All right, let's get started. Just waiting for Dijon to enter this room, and then we could, yeah, we can definitely get started. So let me see what's going on here. We have a mentoring session with Dijon right now, guys. So if you guys have questions, I'm probably not going to be able to answer them right away, but I will be going live for our weekly chart analysis a little later. So let's keep that in mind. But right now, it's just a private session with Dijon. Think about scalping US 30 right here. See if I can get into this. I know that the symbols have changed. Equities. Nice. Looks like there's a bunch of new ones here. We have stocks now. And there's a lot of options here now. Okay, cool. Cash EFD. US oil. Yeah, we had a couple new options. Oh, fuck. Okay. We got a couple new options here. Looks like it's about to hit TP on that one. Should have taken that trade. Let's see where's Dijon. He's joining right now. Let's get started on this. Put this right here. US 30. If it comes down, I might enter it. It's on the chart. Interesting. Pips has it scrolled up since then. See, pricing is about 82,301. Well, it's not hugely off. Let me see the difference. So 310,8270 minus 310,790. What the fuck? Okay, the numbers are a little off. Let me try to fix this again. 310,8370 minus, why is there so many numbers on this one? 310. Okay, I see. It's not a huge difference. 31083 minus 31080. It's only off by like 3 pips. It's not a huge difference. So it's, I don't see much difference on here. This just goes off by a little bit. Yeah, it's only off by like 30 pips, I believe. John, let's see. He was going to join like 5 minutes ago. I'm trying to see where he's at. It's funny. Still looking at the chat right now, guys, in the premium. It's like he is trying to do FTMO again. Right, let me just answer these questions while Shawn makes his way in here. Got a whole bunch of questions over here on the Telegram. Let's see. All right, where is Dijon at? Let me check in on him again. Dijon. All right, what's up, Dijon? How's it going, bro? See if I can hear you. There you go. You're good.
There we go. All right. I need a new computer because it wasn't connecting this entire time. It still got the little the loading thing up.
Yeah, bro, I was waiting for like 5 minutes. I was like, is he showing up? Because I'm right here. Like, this is streaming on the YouTube too. So we have people in the room, but they're just waiting.
Yeah, that's stressful, man. Jeez.
Yes. Let's see. What did you want to cover today? You wanted to cover your trading plan, right?
Yeah, mainly that. I wanted to make sure I can make around, let's say, $60 a day without over leveraging and stuff like that.
Yeah, no, definitely. Cool. So if you want to make $60 a day, do you know what you're going to be trading? Do you have like a specific, like, do you plan on just trading everything, or do you plan on having like something specific that you wanna trade?
Mainly, I'm gonna be trading the FX calls that you call out and US 30, and I'm also doing the options. Those are the main three.
All right. Because the thing is, if you're trading a lot of different assets, that's going to make it more complicated because you got to figure out, how much you're risking per day. So, I mean, it's not that complicated, but you're not going to have consistent numbers, right? Because for one day you might have good options trades, for one day you might have good forex trades, for one day you might have good US 30 trades. On some days it might be bad all around. So, just keeping it at a normal, like a normal risk appetite. You should probably just be risking. I think your max per day should probably be 5%. So if you go below 5%, you should probably just take a break.
Yeah.
And you should keep it between maybe 1% or less per trade. So, for example, if you wanted to make $60 a day, you should probably be risking, or your account size should probably be. I'm trying to think. So it's not 600. 600 times 1. $6. So you probably should have like an account of 6,000 very least. 6,000 very least. You'll multiply that by 1%. So each trade, if you're risking 1% or even something less than that, you'll be making about $60 or less. So depending on how many trades you plan on taking, obviously if you go below 1% or below anything more than that, because I don't know what you're like, your goal shouldn't really be like how much profit you should make per day. Your goal should be how much you shouldn't be losing, right? Because if you eliminate your losses or you minimize your losses, you should be able to make profit on it, like no matter what. So I think your main goal should probably be how much you're willing to lose per day. So what do you think that number would be?
Since I'm doing about, say I'm putting 750 on MetaTrader and 750 into Robinhood for options.
Yeah.
I probably wouldn't want to lose over about $60 probably a day. 60,
Okay.
70 in that area.
All right, cool. So your risk should be like way below 100 then. So that's basically how you would calculate it. So depending on, so you said 70, 50.
Yeah.
Yeah, so 750. I mean, you're not gonna make $60. If you're doing proper risk, you're not gonna make $60 a day with account that small, you're gonna be over leveraging regardless. So like 750, even if you had 750 and you're risking like 5%, you're only making 37.5 a day, which is not bad, like it's not going to be that max risk. I mean, this could probably be your bleeding point. Like if you lose more than $30 or more than $40, then you could probably stop from there.
Yeah.
But like I was mentioning, it's really going to depend on, because if you're taking, like, say you're taking 5 forex trades and they're all going to be like 1% risk each time, you're going to get close to this percentage point right here. So I don't think you could really mix options with Forex, because it's going to be different. For options, you're going to be like swing trading. You're not necessarily going to be making profit each day. So I think for your options, you should probably determine that by weekly or monthly basis, because you're not really gonna. I mean, I don't know how you trade options, but I know normally if you trade options, you're gonna be holding it for at least more than a day, right?
Yeah.
So for options, that your risk could be different for that, because you can just do that as 10% per month. So at that point, you'll know how much you'll be risking. But depending on which options you're trading, options are a lot more riskier, because you could I mean, there's going to be more. There's more that goes into it versus you day trading something, and then you could understand like how much you're risking and how much you're making per day. Because for options, you can make like $0 one day, or you can make $0 for like 3 days, and on the fourth day you could have a win for maybe like over $100. And it could go both ways. You could lose that much as well. So I think you should just keep that risk different for your options determination, your trading plan, and then your trading plan for Forex. Because if you're trading Forex, it's easier since they're all going to be within one account, and you can kind of gauge, where your risk is going to be. So when looking at that perspective, if you're going to be calculating your risk for Forex and US 30, you should be risking about 1% per trade. It's going to be different so which broker are you going to use for US 30? Because I know for some brokers, what was that, bro? Sorry.
Oh, my bad. I didn't say anything.
Oh, I thought you said it like made some noise. Yeah, for US 30, are you planning on using a broker that's going to let you trade like a smaller amount? Because if you're trading with Hugo's Way or something that doesn't have mini or micro,
Shawn, me and Hugo's don't get along no more.
yeah, because it depends on what you're trading. Because if you're trading on like CoinEx or something, then you can trade a smaller amount, right? You can trade like pennies. But if you're trading,
it was most likely going to be CoinEx because I think it's about $55 to $60 to trade U30
for like the bare minimum, like a 0.01.
Yeah.
Okay, then that's cool. Yeah, if you're gonna do that, I mean, you're still gonna be over leveraging, right? Because you said max you'd be wanting to lose is $60. So in reality, if you wanted to trade US 30, your $60 are gonna be at risk. So I think your risk is probably gonna have to be higher. Like there's no way you're gonna be able to trade with proper risk management with such a small account, because I mean, if you're doing 1%, so if you're doing 1% on for US 30, 1% is already going to be higher than the smallest lot size. You're definitely going to be going over that. Do you kind of get what I'm saying?
Yeah.
Because obviously US 30 is like 100 times worth more than normal Forex pairs. So for Forex pairs, you could be risking like pennies to dollars. So that you'll be within that $60 threshold. But if you're trading like the smallest lot size for US 30, even on CoinEx, and you're doing 1,500 pips, do you know how much is it worth per pip? We can do the calculation here if you know it. Because I don't know. I don't use CoinEx, and I don't trade like anything that small of a lot size, so I'm not sure what it would be. Is it like
I think 1,500 pips is about 150.
150 risk?
Yeah, $150. Yeah.
Okay, with the smallest lot size, right?
Mm-hmm.
Okay, so yeah, you're going like well over the limit, right? Because if you take the daily trade, you're only trying to risk $60, but you're going to go way over that if you take that trade. So, I mean, risk management is really like literally out the window at this point. If you want, because like I wouldn't even recommend trading US 30 with less than 1,000. And if your account size is only 750, it's you're going well over it. So, I mean, I guess it's fine for you to over leverage right now. Yeah, I mean, you'll have to over leverage anyways because your account's too small. But I
guess it's one of those, as long as you understand what you're doing and what the possibility is.
Yeah, exactly. So there's no problem with you over leveraging if you understand it, right? Because over leveraging only becomes a problem when people take like big ass trades and they don't realize that they're taking so much risk, and then they question, like at the end of the week they're like, what happened to my account? I was like, obviously your risk management wasn't there. But if you understand it and you're like, all right, I already know my risk management's not there. But if if you're okay with it, then that's completely fine. So
yeah, I'm fine with it because
you're trying to make you're trying to make money off a smaller account, so it's fine if you understand. So you probably won't be able to use proper risk like how we normally advise, but because our win rate's not that low anyway. So I don't think it's going to go that, you should be able to make some money off it, even if you're over leveraging. So I think your max risk should probably be 10%, because 3% to 5% is too little for your account size, especially if you want to trade, um, especially if you want to trade US 30. So if your risk for that's like 160, I'm gonna try to figure out. So like 160 divided by, sorry, let's see, 160 divided by 750. Shit, your risk is gonna be high. So your risk is gonna be like 21%, bro, if you're doing that. So I mean, so this will give you, like, you'll have at least 4 or 5 chances before you blow your account, basically.
Yeah.
Because if you're doing 100, divided by 21, you got 4.7 trades that you can lose back to back. Like, these are back to back losses. You got to keep that in mind, because we usually don't have that many back to back losses. But you're going to be risking a lot, but you understand the risk, so you already know that this.
Yeah, and from what I've seen over the past year of watching y'all trade or whatever, most of the US 30 trades go at least about, I'd say, 500 to 750 pips in profit. Like, even when it loses, it goes at least halfway before it reverses. So if I feel a certain way, I pull out, or
Exactly. So if you're able to at least move your stop loss and profit, like if you're moving your stop loss and profit, I think you should be fine. It's just a matter of being consistent with it, right? Because it's easy to say you're going to follow the exit strategy, but in reality, are you really going to follow the exit strategy? you know what I'm saying? Like, you know exactly what I mean by that. It's like, because it's happened to even me myself, where I sometimes I fall off track. I don't follow exit strategy, and if I did, I probably could have locked in a lot of profits and minimized some losses. So I think it's definitely a possibility, because the thing is, even if you start using your exit strategy and you're making 160 divided by 2, you'll still make $80 a trade. Obviously, you won't make the full profit, but you'll be able to lock in at least something. So I think that'd be good. At least until you build your accounts like over 1,000. Once you build your account over 1,000, you can take a little more risk. But I think as of now, that'd probably be decent. Like, it'd be enough to grow your account out of 750 to at least like maybe 1,200, 1,300. And then at that point, you can start either letting it run, or you can just keep doing what you're doing. Because either way, you should still end up in profit at the end of the month, whether you're using the exit strategy or not. But what I recommend is, like, you got to do the same thing for every trade. Like, you can't use the exit strategy for one trade and then let it run for another trade, right? Because like for one trade, like when you're using the exit strategy, if that hits full TP, and then the one that you don't use the exit strategy hits stop loss, there's going to be an imbalance in your profits. Do you get what I'm saying by that?
Yeah, I do.
So I think you're fine, because the biggest key when you have a small account is eliminating losses, right? Because the more wins you just keep stacking, the better off you'll be, because you'll be able to bounce back from that. Like, you'll just keep stacking those little profits, and then you just don't have losses. So it just keeps, it's positive month after month. And then when you keep using, not higher risk, but your lot size is increased because your account increases as well. You should be able to grow that. And then once you have, a surplus of profits, then that's when you can start taking more risk and just letting trades run to full TP. So
yeah, that's mainly what I'm attempting to do at the moment. Just, build slow, mainly not go over a mini lot. What is it? No, it's a micro lot. Is it? I forgot. Forget it. One lot. That's mainly what I'm gonna be trading everything on.
Yeah, so I think that'd be a mini lot, right? Yeah, is it?
Yeah, I think so.
Yeah, or a micro lot, actually, because it goes
micro. Okay.
Yeah, sounds about right.
I was hitting around the ballpark somewhere.
Yeah, it's I mean, it shouldn't be too bad, bro. Because honestly, I think the market can swing back up. The market's just been kind of crazy lately because of Biden's got inaugurated, and then just last week he just started implementing like all these like new policies. So like obviously it affected the market, so it's been kind of choppy. But I think now that he's in house, I don't think it's going to be as crazy as it's been like the past couple months.
Yeah.
Unless Trump wants to come in and do something crazy again. Because honestly, you don't know. Like he's not president anymore, but he's still gonna. Actually, I don't know because didn't they disable his Twitter?
Yeah.
So I don't know. I honestly, like I can't say if the market's gonna be smooth or not moving forward, but I definitely think it's gonna be a lot smoother than it's been in the past because we had a lot of holidays. You know, also a lot of people didn't realize that like last week was a holiday with MLK. I don't know if there's any other holidays coming up. I think we're good for the rest of the month.
Yeah.
Yeah, I think we should be good for the month. So personally, I think it'd be cool, but I mean, we'll just have to wait and see. But yeah, I mean, going over your trading plan, I think for the most part, you should focus on using the exit strategy. You know, a lot of people don't like moving their stop loss to like TP1, but I think in your case, that'd be your best option because you can lock in some TP1 profits and just keep stacking those up. Because I mean, looking at our results, bro, I think we almost always hit like some sort of TP before it ever like retraces back. I mean, most of the time we do hit full TP, but it looks like here, like we have full TP, TP2, TP1. Like if you just keep locking these in, you'll still be able to lock in some profits. And even like
Yeah, like I looked even at a lot of the losses from US 30 or the UK 100 that you guys been trading. It's like, yeah, the losses, they go in profit a good bit, a good bit to, take some profit there. So I don't think it should be an issue with.
exactly. And like one thing that you can do too is you don't even have to reach TP1, bro. If you're able to just watch the trade, you can take it. And then if it gets even close to TP1, you could even just close out there. Because I mean, I think your main goal right now with a small account to grow it is to just lock in profits. You know, just keep like snatching up profits like here and there. And then once you have like that nice cushion, you know, like once you make a couple $100 and you're above 1,000 equity, that's when you can start taking more risk. Because if you go back to 750, that's cool because you already, you know, you're out of that little range. But I think for now, I think, you know, just thinking about your plan right now that you want to grow the account and then at that point then take bigger lot sizes or start letting them run. I think you should be fine with just at least closing them out in profit. I mean, at least make some profit. You know, don't close them out like when it goes $1 in profit. Like because you know, some people are like that. They'll see it going in profit $1 and they get scared and they just close it out. If you do that, you're never gonna grow the account. But you have to let it at least go in profit, like maybe like say if TP1 is like 15 pips, right? If it goes to like 13 pips and you don't have a good feeling about the trade, then just close it out because you're locking like $13 there. You just keep doing it over and over again. Cut and then if it ends up, you know, if it ends up spiking up and it goes past TP1, just move your stop loss to TP1 so that you can guarantee that. But I think yeah, right now with your account size at that level, I think you're gonna be better off like locking in profits and just keep doing it because our win rate's so high. Even if you were just to take, you know, just go straight to TP1. I know some people in the group they just go to TP1 sometimes. Like they're in your position, and instead of setting their target at you know full TP, a lot of them just set it at TP1, and then they just keep stacking up profits from that point. So
Yeah,
that
that
might be
seems like a good idea.
yeah that might be a goal for you right now. You know, just to get to that point. Obviously, your risk is not going to be balanced because your risk to reward is going to be like 1 to 3 instead of 1 to 1. But with our win rate, I think you should be fine because you know, odds of you hitting a stop loss are like not that high. Plus, if you're doing, I mean, technically you only need 3 wins to cover that like big loss. So I think you should be able to hit TP1 at least 3 or 4 or 5 times before you get a stop loss, right? Because we don't usually have that many stop losses, like full stop losses that are hit during the week, anyways.
Yeah.
Yeah. I mean, you have to have some horrible luck, bro, for that to happen to you. Because it's like, like I remember there's one guy that I don't think he's in the group anymore. He kind of just took a break from trading, but for some reason, he only like I told him I was like, bro, you got to take every trade or you're not going to have consistency, right? Because not every trade's going to be a winner, not every trade's going to be a loser. But he had the worst luck, bro. Like he wouldn't trade like on Monday or Tuesday, and he just waits till Wednesday, and the one trade he takes is a loss. It's like the only loss for the whole week, and he never listened. Like it happened to him like I think over a whole 6 month period from like last summer. And I kept telling him, you got to take every trade. And he's like, I don't have time. And I was like, well, if you don't have time, then don't rush any trades or don't like force any trades. And then the only trades that he took, like he'd take 1 or 2 trades a week and they're the only losses that we would have. So you got to be like, that's another thing that I got to tell you. Like, you got to be consistent, right? You can't just be nitpicking with your trades. You got to take every trade because, it like in reality, trading becomes a numbers game. It's a numbers game. It's a numbers game and a game of probabilities. So like, if our numbers are high, like our win rate's high and our probability is high, and you take every trade, you're going to be able to lock in, X amount of profits. Like looking at the results over here, if you were to take all of these trades right here, let's see. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 full TPs, or like 9 TPs in general. Like if you were to go for that one, that TP1 at the very least, and then 1 stop loss. So if that was the case right there, you'd have like 9% because you're doing only a TP1. 1% would be fine. And then you just have 1 loss, minus 3%. You'd still be in profit 6%. So even if that was the case, like if you had your 750 account times 6%, you'd have profit of $45 at the end of the week. And then obviously that'll just keep adding up, because from that point you'll have 750 plus 45. Now your account will be at 795. It doesn't look like much, but it keeps compounding over the week. As long as you're in positive profit at the end of the week, then you should be good for the most part, because this will just keep adding up. Like it'll go from like, 795. And then if you had another win, you probably stack that up like another $60. And then every month it's just going to keep increasing until you get to, your desired goal, which would be closer to like 1,000, like 1,300. And then from that point, you can start letting the trades run instead of moving your stop loss, because you'll have more money to risk at that point.
Because I plan on doing that and the FTMO challenge just for the 10,000 though, because I'm not interested in dropping $600 on the other one. So
yeah, I feel you. Yeah, so yeah, if you're gonna do that, then I think for the most part, I think you should be good. Like even if you're doing FTMO or if you're doing a normal account. But so here's the thing with FTMO. Let me just do the math real quick.
I still need a better understanding of the FTMO though, because I see a lot of people where a trade will go to the daily loss or something like that, and sometimes it'll count against them, and sometimes it won't. So
Let me I'll pull up FTMO right now. Let's see what's good. So I got the website loading up right here. I got FTMO right over here. So if you're doing a 10,000 account, you can risk 500 per day. So if that's the case, the clock resets, I think 2 p.m. Let me check real quick. Time zone. So their clock is based on CES time. There we go. Wait, that can't be right. They're on standard time. All right, so yeah, so where are you located, bro? Are you on, or what's your time zone?
Eastern.
Okay, so Eastern. All right, so FTMO resets every day your time at 6 p.m. So right here, your max loss. So this is why for my own FTMO, I only take the daily US 30 trade, or I take like scalp moves, because I want my trades to be closed out by the time that the clock resets. Because the thing is, if you have your trades, so say if you have a trade running, you take a trade like at 5 p.m., right? And your trade isn't closed by 6 p.m. and you're already in like $200 drawdown at that point. If you don't close that trade and you carry over to the next day, that loss carries over to the next day. So you could only, like technically each day you can only lose 500, but since you're already in 200 drawdown the next day, you'll have only 300 drawdown that you can reach. Do you get what I'm saying?
Yeah.
Yeah. So that's where I don't understand why people get confused with that. It's really simple. It's just don't carry your trades over to the next day, because if you carry it over to the next day, your drawdown is going to carry over to the next day as well. So like that's why for me, I just take the daily US 30 trade because it usually closes before the date turns over. So at that point, if I have a loss that day for like 2,000 and I have a 5,000 max loss, I'm fine because that clock resets as soon as the next day starts. So then when I take more trades on that next day, that daily loss won't be triggered because it resets back to 5,000 for me. So like for you, you'd have a max loss of 500. As long as you close all your trades by 6 p.m. your time, then you should be able, like it'll reset. You can lose up to 500 again. But the thing is, if you have a trade that's running, say you have an active trade, it's in drawdown. That's why, like, if you're in drawdown, I feel like you should just close your trade before it resets and then just re-enter the trade if that's the case, so that it gets reset. Because the problem with a lot of people is that they don't listen. You know, it's like you tell them to close your trades by a certain time, and they don't get it. They're like, okay, well, I'm gonna hold it over, and then they get mad when FTMO is like, they explain it to them like the rules are simple. You just got to close your trades before turnover, and they're like, well, that doesn't make sense. Why can't I go into like $1 million drawdown? Like that's crazy, bro. Like people do the 100K count, and they're like, why can't I go into drawdown 100K? I'm like, bro, think about it. If you had someone trading your account for 100K, would you let them go to 100K drawdown before you force them out of the trade? Like it's common sense, bro. But a lot of people just don't get it. They're like, well, it doesn't make sense. Why can't I lose all that money? I'm like, well, you think about it. Would you let someone lose that much money? So, I mean, it's really simple. It's a really simple concept, but a lot of people just don't get it. And, you know, that's like, it's funny because we always talk about it in the group, you know, trading is not for everybody because you literally have to understand risk management when you do FTMO. So, I mean, I see that you understand it, so it should be a big deal.
Yeah, no, I think it'd be pretty easy to get that $1,000 within a 10-day trading span too, as well.
Yeah, exactly. So, like for example, here, you know, like you're gonna have a $10,000 account. You only need 10%, which is $1,000. So if you're like for a whole month, right? If you're doing a whole month, and then say for a whole month, you're only like 3% in profit each, or let's say 5% per week, right? Because it's totally possible. If you're risking 1%, your odds are you're probably going to have, you know, X amount of wins, X amount of losses per week. Because I think, yeah, for our normal, we see the monthly results for us. So our monthly results, probably go farther back. Let me go to results over here. Farther back before December. So each month we have at least like 39 wins, or yeah, we have X amount of wins here. So like if you just use this as, for example, like for November we had 39 wins. So you'd have, if you're only taking TP1, you'd still have 39% in profit, right? So you'd have 39%, and then for those 3 losses we had in November, you just subtract that by 3, subtract that by 3, another 3 for 3 losses total. You'd still be 30% in profit if you're only taking TP1 for every single trade. So you within that whole month, you'll have 30% in profit, and that'll be way easy to cover this, you know, $1,000 profit target, because this is only 10%. So you're gonna go way over the profit at that point. Like I mentioned earlier, you know, it's really a numbers game. If you really break down the numbers, and if you have a plan, like how we're talking now, if you just go for TP1 each time, and then you lock in X amount of profit using proper risk, then you should have no problem passing it. Because if you look at like every single trade we took here, there's like every month you're at least in 10%. Like it's hard for you to get below that. The only reason you go below that is if you took too much risk for like certain trades, or if you just didn't follow the exit strategy.
Base 3 standards on the GJ trade.
Exactly, dude. It's crazy because like I feel like a lot of people, they still feel like they treat trading like it's gambling, you know? Like for me, I've been trading for a long time, so I always advise people to use proper risk. But you'll see people that use proper risk for like 1, 2, 3 trades, and they have like a hot streak, right? They have 3 good trading days, and then on that 4th day, they go super over leverage on one trade, and then they blow the entire account. So I'm like, damn, if you just followed the trading plan, it's literally impossible for you to blow your account. Like there should be
for me, I think my main issue back in the day came like, let's say Monday, Tuesday, Wednesday, I'm in profit about, let's say, 70, 80 bucks. I would go and continue to trade on Thursday and Friday, even though I know that I didn't have to.
Yeah, exactly. I mean, it happens all the time. Like, and this is one thing that you can keep in mind too. So if you're taking trades early in the week, and say by Wednesday, it's not good, right? You just have a bunch of losses, which usually doesn't happen. But if that happens where you have more losses than you would like, then I would just skip the week. because I don't know if you followed like, our results. Usually if you follow our monthly results, um, there's usually like, there's usually like 3 good weeks and then one shitty week out of the whole month, right? Like for like indices over here, we have like 6,000 profit straight wins for December week one. A decent week for week two, 750 profit. Week three, 5,500 pips, and then week four we have like a red week. So that's one thing that you can take into consideration as well. Like if you're having a bad week, I would just cut off that week and then move on to the next one. Because if you look through like any of the results that we have, it's usually the same like throughout the year. Like generally, let me see here as well. Yeah, like looking at even our October results over here, we have like first week of October, we have like 377 pips for Forex, then 271 for week two, 400 for week three, 400 for week four, and then week five was only 154. So you can see there's usually like 1 week out of the month. That's usually like a shitty week. So if that happens and you start to realize that the trades aren't so good that week, that's probably a week that you should probably just take a break. I mean, same with the indices. Right here we have like 5,000 pip profit, 2,000 pip profit, break even, one red week, and then another good week after that. So you can see that there's a pattern with how the market moves. Like we usually have an overall good month, but you can't let that one bad month like blow your account, right? Because I feel like I feel like that's what happens with a lot of people. Like we'll have one great week, which happens all the time. It's usually NFP week. I think first week of the month is usually our
NFP is always the best, man.
yeah, because you have a ton of volatility. You can just catch those trades every time. So like what I've seen with a lot of people is they'll have one great week and then the next week that's when they start to over leverage because they get too overconfident. And at that point, it's like, if you just stuck to the plan or if you just took a break during that bad week, you could have been completely fine. You would have survived that move. So, I mean, that's like another word of advice I can give you. I mean, there's a lot of things I can tell you that will that will help you with like your journey with trading this new account. But I think the main goal would be, I mean, proper risk is probably not going to be something I can tell you right now because your account's too small. But I mean, proper risk with 10% still works too. So use proper risk. Don't ever lose more than 10%, I guess, within uh, a week, I guess. Yeah, a week or a month better. But with your account so small, you're going to have to take bigger risks. So maybe 10% per week. And this is basically what makes me so good at FTMO because I'm already following these risk things on my normal account so that when I go to FTMO, it's not a big deal because I'm already aiming not to lose 10%, like how I mentioned, 10% for the whole month. So if you're able to pull this off trading your normal account, I think you should have no problem with FTMO because that's what it really is. It's about managing risk properly because you already have a strategy that works. You have signals that work and you know that they work. So as long as you take the trades and you do the same thing every single time, then I think you should be good for the most part.
And like for the FTMO, what would be the best lot size for that account? Like when I'm taking daily US 30 trade, what would be the best lot size to use?
Let's see. So here's the thing with FTMO too, it's different. Like when you're doing the challenge phase, you kind of have to over leverage because you got to reach that goal, by that time. So you should probably risk about 3% per trade or 3% per day, so that you can make enough profit to possibly reach that goal before it reaches your deadline. Because what happens with a lot of people is they trade too conservatively. Like they only trade less than 1% when they're doing the challenge. And later, like as soon as you know it, 30 days have passed. Because in reality, it's not 30 days. It's like way less than that because you got to count the weekends and you got to count holidays if there's a holiday during that month. So in reality, you really only have like 20 days or less. So the thing is, if you're trying to reach that 10% gain within 2 weeks, technically it's 2 weeks. If you just count if you're trying to count every single day, you only have X amount of time. It's like 20 days or less for you to reach that goal. So you should probably risk about 3%. So let's see, if you have a 10,000 account times 0.3. So you should be risking about 300 per trade. So 300 per trade, you said that if you're taking the smallest lot size on CoinEx, which would be, well, okay, so it's different. For FTMO just changed the symbol. So I think you're probably gonna be risking, I'm trying to think here. It's not 3 lots. That's 20 times 1500. Okay, so you should probably be taking a 0.2. That should be your risk, your lot size for FTMO if you're going to be taking just the daily trade. Because if you're taking just the daily trade, this would be 3%, $300 risk. So you'd be risking 300 to make 300 per trade, basically.
Right. And is the 0.2 lot actually like I don't know how to put it. Let's say because it's this one broker that I used to use, CoinDex does it as well, where a standard lot on US 30 is actually a 0.1 lot. So like
oh yeah,
that's something
so
similar.
I haven't traded on the new symbol yet, so I wouldn't know exactly, but I think so before it used to be a 2.0, like a 2 lot would be equal to a 0.20, right? That's how it was before because they were using mini lots, but I think now they're using normal lots. So I think a 0.2 would be similar to like on Hugo's way where it was a 0.2 as well. Because I know CoinEx, their measurement used to be like the old FTMO where you'd have to just basically take off the 0 or move the decimal over by 1. So example, if you were taking a 2.00 on a normal broker on FTMO, that would be a 20 lot. So you just, I mean, it's you basically just move the decimal over by 1. So like, for example, let me see if I could open a little pad here. Yeah, so this is going to be old FTMO. Old FTMO, let me fix this. Old FTMO would be any lot equals 0. Or I'll do this actually. So old FTMO, it'd be a 20 lot, 20 mini lot equaled 2 standard lot on normal brokers. You kind of get what I'm saying there? You just move the decimal over by 1.
Yeah.
So technically on old FTMO, you'd be taking a 20 lot, but that's going to be equal to a 2 standard lot on normal brokers. So like normal broker would be like Hugo's way, I guess caught. I don't know if I've never even, I don't know anyone that still uses them. So I don't know if that's how.
Man. I remember all the memes from last year, man.
Oh, that's funny. Yeah. Aaron is still sharing those with his own students now. It's funny because they ask about it all the time. So like for that, yeah, that would be how it would be there. I think the new FTMO is going to be similar to the standard lot. So like new FTMO, which is now going to be US, I think it's like US 30.cash or something like that. It's going to be, they're going to be using standard lots now. So it's going to be, 2 standard lot will be equal to a 2 standard lot on normal brokers. So they're just going back to the normal measurement.
It makes it easier because I ain't want to mess around on there.
Exactly.
15.
Exactly. Yeah, no, for sure. So that's why I need to figure it out first because I don't want to tell you this right now, but I think this is what it is. I haven't taken a trade on with them yet, but I think this is basically what it's going to be like now when we're taking these trades. I'm probably going to take a test trade soon. I'll just take like the 0.1 and then see how that ends up working on here. Let me see if I could even. Yeah, because I'm trying to take the scalp. It looks like the numbers are the same too. The difference is only about like a few pips. So I'm looking at it right now on my screen. The spread's a lot tighter, but I think it's only off by like a few pips, maybe like 1 to 3 pips, which is good because it's gonna be a lot closer. It's just gonna be a little different. But yeah, this is pretty much what I see on here. Once I confirm and I take a trade on my own account, then I can confirm it for you guys. But I think right now, currently, this is basically what I see happening for it. So I'm trying to take one right now, actually. So if this drops down to this entry point, I'm gonna enter a scalp for this. I'm just waiting for it to actually come down.
Look at those wicks.
I know, bro, it's crazy. So I'm kind of tempted not to take it, but I kind of do want to take it using the new strategy that I was applying. I think you saw. Did you see how I explained it on the last session or a couple of
Oh,
sessions?
yeah, I didn't get to write it down, so it's kind of, scrapey in my mind.
Oh yeah, no, definitely. So like basically for this right here, actually this wouldn't even be an entry. I'm gonna close this. The entry would have been right here actually. But actually, no, I was right. Yeah, I was right. So like for right here, like what I was looking for is I was looking for price to let me just draw the zone right here. So I take that off. What I do for this scalping strategy is I look for price to reject off a pivot, like right here, reject off the green pivot, and then it rejected off the zone as well. So if we have that where it's a double rejection, odds are it's probably going to shoot up at least 500 pips. So like right here, I was trying to make this entry for a late entry because I missed this little push up right here. So I'm waiting for it to come back down and then make the same late entry for this specific entry right here because it hasn't hit full TP yet. But it works pretty nice. Like for example, right here, here's another entry where we have this candle come and test the pivot and also test the structure. And when it does that, we go down for a nice little scalp for like 500 pips. And then obviously right there would hit full TP.
Hey, that's nice.
It's really nice. It's something that I figured out. I've been like, because I was watching a lot of people scalp, and I was like, man, I want to figure out a new scalping strategy, like one that's a little easier to follow. So like I figured this out, and I was like, man, this is super smooth. And then every time it comes down again, let me see if there's another one down here. So like, here's another one right here as well. So like same exact thing. We have the rejection off the pivot. We have the rejection off the zone. So we have those two right there. We catch it down for another drop of like 500 pips right there. Full TP again. It's pretty accurate. So right there, full TP, right there, full TP. Technically, this would have been 3 entries because you could take this red candle, you could take this one right here as well, and you could take this one right here. So that'd be 500 pips already, full TPs. And then you take this one here, that'd be another 2,000 pips. Top it off to 2,000. And then right here, if we were to take this one, this would be another one for 2,500. So that's pretty much what I've been applying. And we have another entry right here as well. We got like 1, 2, 3, 4. Like 4 entries right here times 500 each. That'd be another 2,000 pips.
That's not bad at all.
It's not bad at all, right? And this is, like I mentioned, it's a numbers game, right? It's a game of numbers, a game of probability. So the thing is, if we're taking all these trades right here, it looks like we might have had a loss somewhere over here. Let me see. Actually, no, we wouldn't have a loss here because these over here came and rejected off the pivots, but it never rejected off the structure. So we wouldn't have taken these trades right here. So we'd skip this right here. We'd skip all of these over here as well because they all cut into the zone. And then these right here, we'd skip them because they rejected off it, but not off the zone. But right here, this is actually a clean entry. It rejected off the zone and the pivot, and we could pretty much catch that, that little write up right here. So this is pretty much what I'm going to be focusing on. I might even start trading this live. So in the mornings when I go live, I'll probably just be scalping. And I'll try to call the daily entry. But I mean, for the most part, I think I'm gonna start scalping again as like volatility starts to pick up, because you could lock in a ton of profits just doing this. Like even again right here, we have the rejection off the pivot. We have the rejection off the zone. There's another win right there. There's one win right there because you could take this red one right here. And then there's another one right here for this green one if you decided to take that one as well. And then you could just keep taking all these trades as they come up. So this is what I've been working on, and this is what I'm probably going to start applying for a bit, because I'm trying to make more money off FTMO, bro. Like I'm making pretty good off FTMO every month, but I'm trying to make more because I already have a system down. And the thing is, if I take these trades, these could offset the daily entries, because the daily entries aren't always on point. Obviously, there's nothing that's 100%, but
Yeah.
if I'm able to continue doing this, I can, like I could lock in like 500 to 2,000 pips. And then once I get to the daily entry, if it loses, I'll still be in profit. If it wins, I double up my profit. So, and I'm still going to be within the risk, because in reality, I could lose, let me see. In reality, I could lose
Even
about
like 5,000 for the 100.
Yeah, exactly. It's 5,000. So with that full daily entry, I'm risking 2.25. So that's how much I'm risking. Divide that by 10,000 or 5,000 actually. Or no, it's off. So 5,000 divided by. Actually, I'll do this. So if I do 5,000 and then I subtract it by 2,250, I still have this much to lose for the rest of the day. So if I'm scalping within that, I can like either recover from that loss for that daily entry, or I can pretty much make more if they're like double wins. Because in that case, I would mean profit 2,250 already, and then I could just keep adding up these like scalp wins along the way. And the thing that I like about these scalp wins is that they usually hit within like an hour, so I don't have to carry these into the next session basically. Like for right here,
Fast and quick.
yeah, this is about an hour 20 right here, and this is in Asia session too. So this is something that I could apply all throughout the day. It's not just going to be during US session and London session. It's like if I'm bored and I want to pull up the charts and I want to hit some scalps, I could hit them on US 30. And then I also saw that they work really well on GJ as well in the 30-minute. So if I go to GJ and then I pull this up like on the 30-minute, let me see if there's one that we have over here. Actually, all these would hit. I still got to figure out because, like for example, right here, like we have them where they reject off the pivot. I need to figure out if I need the candle to close outside of the zone or if it's fine if it closes within a zone. Because it looks like right here, if we were to take something like this where it rejects off the pivot and the zone, but it's still within the zone, that's like 38 pips right there. We have another one where it rejects off this point again right here. It's another 38 pips. Another one right here. Another 38 pips. So that'd be like 3 back-to-back wins right there, 38 pips each, or I guess 40 pips if we round it up, 40 times 3. You have like 120 pips within this little time frame right here for about 8 hours. And then if you were to do that, 120, if you're trading a standard lot, you make 1,200 off this. And it keeps going on. Like if you keep carrying it on over here as well, you see these little rejection points right here. There are some more entries right here. It's like another 38 pips, another one right here.
I think I would be scared to trade in between the zones.
Exactly, yeah, because there's going to be a risk because you don't know if price is going to reject off the zone or not. So that's why I got to figure out if I want to do this where it's within the zone or if it has to be outside of it. Because like obviously if you would miss these two right here because obviously these are within the zone. But if you waited for this one right here where it closed outside the zone, you still have a win for that as well. So it's something that I still got to work on. It's a new strategy I'm still working on and testing. So until I actually get it fully down, I'm probably not going to teach anyone yet. I'll probably just be trading live, but I won't literally be creating a video like explaining how I do it just yet.
Yeah, because you have to make sure, because usually in the zone it loses momentum sometimes.
Exactly, 100%. Yeah, I agree, bro. But I think it's pretty good for the most part. I know for sure it works really good with US 30 because US 30 is pretty volatile. It's just, applying it with other pairs for the most part that makes it a little confusing.
Yeah.
All right, cool. So so it looks like a 0.10 is proper for FTMO. I just took this trade, so I'm in the trade already. I took this scalp right here for a buy. I'm gonna set my TP and stop loss now. Let's see. My entry point was 31,074. So that's good to know. So that tomorrow I'm not going to be all confused, like how the valuation is. It looks good right there. I'm gonna set my stop loss TP 31024. 31124 TP. Yeah, so I took this trade right here on FTMO. Let me see if I can pull it up for you over here. Yeah, so I took a 0.10. So I'm in profit like 60 cents. So yeah, this matches up pretty decent with the normal lot size, the standard lot sizes. Because it's going to profit like a couple bucks.
So, not gonna lie, I have no clue how you managed to trade on the computer.
Oh, for FTMO?
Or yeah, because looking at the at the FTM, not the, but the MetaTrader on the computer, it's kind of hard for me to look at sometimes.
Oh yeah, no, honestly, I don't even look at it. What I do is I wait for the entry on the actual trading view, and I just hit the buy button. I enter market, and then once I do that, so what I do is I enter market, and then I have my entry point right here, like my price of entry. So once I see that right there, that's when I put it into my little thing right here, and then I just put TP stop loss so I know which numbers to put in from there. So I don't necessarily look at MT4 because bro, this shit's old as fuck. I don't like people.
I don't understand why they don't let a lot of these brokers don't let you just trade on TradingView.
Yeah, exactly.
Because it would be so much easier.
So much easier, bro. Like way easier. It's crazy. Like, I mean, I could understand for some people because, like, you know, some people don't like. A lot of people that trade on MT4 are like in countries where they can't afford like the newest phone or the newest computer, so they got to have something with like a low operating system to run the program.
Yeah.
But I mean, they should still make the option where you can trade on a newer broker. Not, it doesn't have to be TradingView, but it's something definitely a lot newer. Because honestly, I don't know how people even look at this, bro. Like when people look at MT4, I'm like, bro, I don't even know what I'm looking at. Like it looks so old. Like even when you enter a trade, it's like, the fuck is this, man? Like Windows 95. like I don't understand like how people trade on this stuff. Like if you compare this to like TradingView, dude, this is like way different. Like you click on this, it's like boom, and it's easy because you could put your risk percentage and your account size or anything like that, and it just makes it easy. Like if I was to take a trade here for GJ, if I wanted to take a buy, let's open my yeah, like if I wanted to take a buy here, this is like a demo account. If you want to take a buy here, it's like you just click buy, and it makes it so easy because if your account was like X amount, you can have like, you know, say if you're taking like 50 TP, 50 stop loss, and then you want to have like your risk percentage at 3%, it does it for you automatically. You don't have to go and do all the work, you know?
And then you can get the notifications for it too, you know.
Exactly.
You don't have to randomly click on it and see, oh, dang, 200 drawdown. Like,
exactly. You know, it's crazy because I look at MT4 and there's like you can't even set notifications, bro. So you don't know if you win a trade or you lose a trade. You have to just check on it like a couple hours later and you're like, oh crap, I lost a trade. You know, it's like it's hard to really tell. But I mean, I have no complaints. Like I still make profit on it. So whatever, if I can still keep being profitable and if I have to go through these loops and holes, it's completely fine with me. Like the main goal is just to be profitable. If I could still make profit and be in the positive every month, like even if it's more work, then I'm not complaining. Especially now with like FTMO. Like the real reason why I do FTMO is because there's no risk, bro. Like I could take like you know, now I risk like 2,250 per trade for US 30. Like, bro, there's no way I do that with my real account. Doesn't matter how long I've been trading. Like risking that much money for like one trade is like, that should make your heart drop if you hit a stop loss, right? Because that's a lot of money that you have on the line. But if I'm doing it with
like the guy from Wall Street Bets that I sent you the other day.
Oh yeah, that dude lost like 40K, right, or something like that.
Yeah,
that's crazy, dude. I can't do that because I value money. You know, I can't just like I don't treat trading like it's gambling. Like I literally trade it like it's a business. Like I'm here to lock in this much profit, lock in this much, you know, this much risk percentage or whatever. And then I'm out of the trade. It's not like I'm like, oh, I make 10,000 bucks on this trade and then I want to double it up, right? I like if I make 10,000, I'm like, all right, I'm gonna wait for the next day for that next entry. I'm not gonna keep making moves within that little move to make more when I could easily lose all of it. But I mean, everyone's different. You know, some people don't like risk doesn't bother them at all. But for me, it's like, you know, I want to last in this game long term. So I can't blow my account. I literally have to make like a decent growth per week, per month. And then I just rinse and repeat every month. Because you've seen from the results, you know, like it does pay off if you use proper risk and you just follow your trading plan. But you know, obviously, if you're treating it like gambling, you can have a big day one day, you can lose your whole account the next day, and it's like, I don't know. I just find it
your house, your car.
Exactly, bro. Like that other meme. You seen that meme where it's like the kid's like he opens the door and he's like, "Hey, Dad, are you winning or something?" And he's like, "No, son, pack your bags." Like, I lost the house. But that meme cracks me up every time I see it. Like, literally every time. It's too funny.
I imagine that's how people were last year when the stock market crashed.
Oh, I know, dude. That's why I don't hold stocks long term because, bro, it's crazy. Like if you look at US 30 from like from March, like I can't even like fathom how, like if you had a lot of money in your account, and then like yeah, we're March hit like right here, like bro, this is a big drop. This shit's big. Like just looking at like this drop back to like where it was in like 2016, bro. Imagine you invested your whole like everything like from 2016, like you just and then or even if you entered like way up here. So if you started your 401k or something like in 2018, damn bro, like I know it recovered, but imagine if it didn't recover, right? Because it doesn't always recover like this. Like, bro, that's a lot of money to be losing from this point right here all the way down to this point right here. Obviously, if you're over here, like, investing all the way back in 2016, you wouldn't be, you barely be going into negative and it would bounce back, obviously. But say if you were like investing over here in 2018, like say you got your first job out of college, 2018, you're just putting money into your 401k up until like 2020, 2 years later, you lose all your money and then it goes even farther into the negative.
And now you got some more debt to worry about.
Exactly.
I think that's the only reason that I don't hold stocks or anything like that, is because I don't want to wake up one day and all my assets are just gone. Like,
Exactly. Yeah. It's the same situation with me. Like I had a 401k for a while when I used to work my lawyer job, and then I sold it. Like thankfully, I sold it off before I left. So I left my job in March or February actually, and I sold off the whole thing. I was like, nope, because I knew I knew it was gonna happen eventually. It was bound to happen with COVID going on and like everything closing down. I had a feeling this was gonna happen. Uh, Thankfully, I closed it out because I would have lost a lot of money.
I would just be sitting there like, imagine waking up, somebody that you don't even know said something wild, and now you 100K in losses. Like, I don't know. Option seems safer, although you're risking a lot. It seems safer to me.
Yeah, yeah, no, of course. I mean, if you know what you're doing with options, I mean, you can. But like, so here's the thing with options. I still don't like. I still think it's better to just day trade if you can day. So that's the problem. A lot of people don't day trade options because they don't have enough money to day trade it, right? Because you need like at least 10,000
Yeah.
sitting in the account. So with options, you can actually trade like your day trading, but you're able to do it with less money, obviously. Because the thing is, like, for example, so if you're buying an option, your strike price is up here, right? You can just buy that straight out, like directional, and you can write it up and exit it once it gets to that point. With options, you don't really have that option. Like, you're probably not going to make any profit until it crosses that money right there, that money line. Um, but obviously when it does cross, you can close out and you can make a lot of profit with a little bit of capital. So if I had enough money to day trade stocks and stuff, I would just day trade it versus doing options. But there's a lot of risk that's involved with options as well, especially if you're trading options for like the smaller stocks that can like literally disappear. Like those, you lose a lot. But if you're trading something like, I know a lot of the options that we trade with like Samir and stuff, they trade bigger names like Zoom, right? So if you're trading
Yeah.
Zoom, obviously it's going to keep going up. So like what could happen is if your strike price is like up here, it doesn't reach it by your date, you can always just roll it over and then go for the next month because eventually it's going to get to that point. And once it finally does reach that point, you can sell the options for some profit.
Yeah, like I remember taking a few of his option trades when he first started out or whatever, and it's not that bad, holding a call for, let's say, 2-3 days, and you're about, let's say, $50 is gained $50 or whatever, and you sell a couple of the contracts off.
Uh-huh.
That's really what I'm trying to do. I'm not really, I'm not interested in holding it unless I know it's gonna go up or whatever. Then I hold, but for the most part, it's like hold it for about week and a half. Sell a couple of them.
Yeah, exactly. Until you make it in profit, right? Like you can
Yeah.
literally hold it. So that's the difference between options and holding directional stocks as well. Is because like you can literally just hold it forever. Like if you want to just keep rolling it over, you can just keep rolling it over. But if you're holding directional stocks, once it reaches your stop loss, you're gonna kick that out of the trade. So like for example, if price wants to drop super heavy by like tomorrow, but you have an option that doesn't expire until like a month later, like instead of getting stopped out, you can hold on to it and just hope for like pray to God it's going to come back up. And then when it does come back up, you're pretty much in the clear versus having to get stopped out like when price reaches your stop loss if you're trading directional.
I'm not gonna lie, I did that with I think it was Ford or something like that, and it did not work out.
Yeah, man. That's why you have to like, I mean, you don't necessarily have to know the stock too well. You just have to know that it's not going to fail, right? That's the main thing. If you're buying options for like Tesla, Apple, Walmart, Amazon, stuff like that, you're cool because
It's
it's never going to go down. It's going to go up, or if it doesn't go up by next week, it's going to go by like next month. Because as the company continues to grow, it's just going to keep pushing up higher and higher. The problem with a lot of people that do trade options is they'll trade like shitty companies, right? And then they'll just make bets and they'll just keep rolling it over until they run out of money. Because because when you want to roll it over, you have to double up. Like you have to double up like your initial investment because you're just basically rebuying your contracts from yourself. So yeah, I mean that's one way to do it if you want to trade options. But I personally don't trade options like actively yet. I just take whatever Samir calls out. Like me and him talked, and he talked to me like pretty in depth about the Zoom call that he made, and I think it's gonna play out because he said that Zoom's gonna join the S&P soon, or if it hasn't already, once it
that's
joins.
most definitely gonna shoot it.
Exactly. Once it reaches that and they actually make it into the S&P, it'll just skyrocket it like crazy.
Is it too late for me to join that?
I don't know. Let me check. Yeah, see, I'm right here. So I think our strike price is 500. So we're trying to reach 500. Expiration is the 29th. So it's got some ways to go. I don't know if it's joined the S. I don't think obviously it doesn't look like it's joined the S&P yet, but I think probably when the market opens, it'll probably spike up quite a bit. Because the thing is, this isn't like a new all-time high. It's just the price point where we're determining, price is going to reach. So if it doesn't reach there by the 29th, which would be, let me see, 29th would be somewhere over here. I think you could still hop in. So the 29th is right here. This is when expiration happens. But it could easily jump up that far because let's see, how far is it from here right now? So price is currently right here. It's only off by like about 115 bucks. I've seen where it's gone up like right here to this point, close enough like 60 bucks. But there's been some days where it just gaps up like right here from this point. It gapped up like 170 bucks. So if it doesn't reach this point by my expiration, I'm just gonna roll it over and for like another month up until like February or maybe March. So if I roll it over like 2 months later, we have earnings right here on the 4th of March, which I think should be good because people are still working from home and stuff. So as it continues and as it joins the S&P, I think it's going to definitely skyrocket at least like $100, enough to push us up to our strike price.
Yeah.
So you could definitely enter that. You could still enter at this point. I just don't know how much it costs right now. Let me see.
It's probably mad expensive. Let me check my Robinhood.
Right, like $500, I think, because my purchase value at the time was the purchase value was about 300 something. It was like 350, I think. And I think now it's probably a little more because price went up since I bought it.
Yeah, that's not bad. That's not bad.
Yeah. I mean, it's not too bad because the thing is you could just buy one contract and then, like I mentioned, if you want to roll it over, because the thing is, this is a big move for it to catch up. So you actually have a lot of upwards momentum from there. And I don't think it's going to drop. It doesn't seem like it's going to drop. It looks like it already dropped over here. Yeah, price came up, swung down, swung up, swung down. This is the low right here. So I think from this point, you could probably skyrocket up. And then once they announce that it's reached the, here, let me check this real quick. I'm going to see where it, DM. There's anything here. And I'm joining SPX. Zoom set to surge in price. Yeah, so it's expecting. So it's gonna happen at some point. We just don't know exactly when. But
Hopefully not over the next 2 days.
Yeah, we'll see, man. Oh, is that when you made your deposit? You gotta wait for it to clear.
Yeah, they freaking sent it through the school, and it always takes up to 5 days when it comes to the school. You know, you went to school, you know how financial aid works.
Yeah. It takes some time for sure.
I had no clue why they sent it to them for my job, but because I was expecting for it to be today, but
you gotta wait another 2 days. Let me see. All right, bro, it's about to be 6. So do you have any other questions? Because I got to hop on for the live session for the chart analysis if you want to hop on that later. But if you guys have any questions, I can answer them right now. Otherwise, we can probably hop on another session if you want to, like later on this week.
I'll hop on the chart analysis.
All right, for sure. Cool. So yeah, I'm going to go ahead and I'm going to go offline maybe for a couple, maybe an hour or so. I'm just going to scan the chart, see if it's like ready. Because there's like no point in us doing a chart analysis if nothing's moving. So I'm probably going to see if there's actual movement in the market. If there is, and we'll do the chart analysis maybe like in an hour or two. But yeah, I mean, until then, I'll probably catch you in there.
All right.
All right, bro. Definitely good talking to you. I'll catch you in the live session a little bit. So yeah, till then.